Okay. Hello, Frank. How are you? So we
Good, good.
have
Thanks for having me on.
Frank Marola is here today with us. He is part of our mortgage department, and we are going to be talking about the 2-1 buy down today. And the reason why I wanted to do this video is a email came out from the Cape and Islands Association. They were doing the market stats highlights, and sadly, cash is king again. And unfortunately, a lot of people don't have cash. They have to do financing, but they're concerned with the rates. And we have spoken about the 2-1 buy down in the past. I speak about it a lot when I have my open houses. And I wanted to share my screen about the process of the 2-1 buy down. And I have Frank here to explain it a little bit more in depth because I feel that there's a little hesitation. It's almost like a too good to be true type of situation, Frank. That's what I get sometimes if I'm explaining it to my friends. They say, well, that's, too good to be true. I did have a client that used it and they were successful with it. So
Right.
let me just get into my shared screen here. Okay. So the way that the 2-1 buy down pretty much works is we're going to use, the current, let's just say the current rate is 7%. So you're able to get your rate in the first year down to 5%. And then the next year it goes back up to 6%. And then the third year it goes back up to 7%, which would be the original rate that you were at when you did this program. Um, Now let's see here. So people often wonder, like, how does this process work? And it has to be written up in the offer. It's typically done with a concession to the seller. And Frank, I'm gonna turn this part over to you on how do we do a concession? Like, how is that figured out for the buyers?
Okay. So yeah, that's a great question. So the buy down, the temporary buy down is funded with a seller concession, just like you said. So the amount of that concession is based on the purchase price, it's based on the loan amount, and it's based on the client's interest rate. So there's an easy calculator that we use where we input those three variables. And let's say the savings over the 2 years is roughly, $8,500, then
Mhm.
that will be the amount of the concession. So uh, sellers are allowed to give up to 3, sometimes 6% in the form of a concession towards the buyer's closing costs, their escrow points, and monies for, insurance and temporary buy downs. So it's just really clean on the offer. We just ask for the dollar amount of the concession that goes from the seller to the buyer. And then that funds the buy down, that funds the buyer's savings. And like you said, if you're going to buy a house, it's a can't lose situation because let's just say rates are 7%. So whether you do the buy down or you don't do the buy down, your rate over the 30 years will be 7%. But with the buy down, your payment in the first year will be based on a rate of 5%, like you said. And then in the second year, it'll be based on 6%. And then it goes back to the safe fixed rate for the rest of the life of the loan. So it is a temporary savings, but it is something that is very important because people are concerned about affordability until they can get to that point where they can refi, if rates, come down, which they're expected to do and come down hopefully back into the 4 or 5% range.
Fingers crossed.
Yeah.
So that leads me to, that's a good point in regards to refinancing. So if a buyer is in the process that they have taken advantage of this 2-1 buy down, are they able to refi in the middle of it? If the rates did happen to, come down to better than what, their rate was originally.
Yes, absolutely. And the whole goal of this program is to put the borrower in a better position. And the monies for this buy down that fund the buy down with the seller concession, it goes into an escrow account. So if that full concession is not used over the 2 years, then whatever is left goes towards helping the borrower refinance. So they do have to make 6 payments before they can refinance, but typically it takes about 6 months to a year or a year and a half for rates to come down to the
Mhm.
point where it makes sense. So other than that, there's no restrictions, and hopefully, as rates gradually decrease, we can entertain refinancing the borrower to a permanently lower rate. And that would be definitely beneficial to them.
Okay, fantastic. Well, I put your contact information here. I'm going to stop sharing my screen. And so, I mean, is there any type of, I mean, I'll just ask you straight out, is it too good to be true, this program?
No, absolutely not. Absolutely not. And if you're looking at a decent sized loan, and most loans are good size today based on the price of a house, a 2 point reduction in the rate, that could mean I've seen some situations where it saves 500, $600 a month, which is money in the borrower's pocket. The only downside possibly is the fact that it can only be funded with a seller concession. So if the offer needs to be absolutely clean, no concessions, tight timeline, not asking the seller for anything, then this is something that we are asking for the seller for. But most of the talented real estate agents I work with know how to negotiate these offers and put it into the mix so that it doesn't become an issue.
Yeah, I mean, I've done one with you in the past, and it's a very simple process. And really, it's just, you know, having the listing agent, educate the seller in regards to why it reads that way. And, that's when a good um, buyer's agent and a listing agent relationship, comes into play when they can communicate well and relay that information to both parties. So, I
Yeah, and
definitely feel it's a win-win.
I would tell anybody, let's just say that there's a concession needed to fund the buy down and it's $10,000. Then I would tell someone to talk to your realtor or talk to their mortgage person and see the difference between offering $10,000 less, how much that will save you per month, which might be $50 per month, or putting that towards the 2-1 buy down, which could, potentially save you $400 or $500 a month in the first year, 200 or 300 in the second year. So the contrast and the differences are astronomical when you look at it as, well, maybe I'll offer 10,000 less, or maybe I'll ask for 10,000 to do this buy down. And I'm happy
Sure.
to do the numbers for somebody, even if it's on a weekend and they want to run some numbers. It only takes a few minutes to figure that out.
Yeah, absolutely. Absolutely. It's a fantastic program, and, I hope more people use it until we're able to get the rates down, because this is a great way of getting their rate down, right now. And this is a program that's been around for quite some time. Is that correct, Frank?
Yeah, it's been around now for a couple years, and I think it's going to be around for for a little bit longer. Rates. If you were on the news yesterday, the Fed had another meeting. They decided to not lower the federal funds rate, and they are alluding to 3 possible decreases in the future, but that's going to take some time. So we're in a higher rate environment until we're not. So this is a very good, viable product for people that want to get in the real estate game and pursue ownership now.
Yeah, fantastic. Well, thank you for your time, Frank. And